Welcome to the first episode of the yet to be named podcast.
Yeah, we still don't have a name for this as of the time of recording, but hopefully by the time people are listening to this, we'll have a name by then. So I guess we can call this episode 1 of season 1, hopefully.
Yep. And in this series, we're going to focus on the stories behind the largest, most successful companies in the Middle East. And today we have chosen, of all companies, to focus on
Almarai.
So Hamza, why did we pick this company?
We can start off by saying that it's a really interesting company because of not only what it's achieving today in terms of its ubiquitous, wide-ranging brand recognition. I mean, it's really a staple brand in almost every household in the Gulf, especially, but now even in, expanding to other parts of the Middle East. And aside from what it's achieving today, which we're going to talk about, its founding story is actually quite amazing too. And its founding story is also linked to so much of the macro themes that have driven this region's growth in particular. And we're going to talk about how all of that is linked together.
For our listeners who are not from the Middle East, Almarai is the leading dairy and actually not just dairy, but food and beverage company in the region. And the Saudi market in particular, it's pretty much dwarfing everyone else in the dairy segment. And yeah, they operate across multiple lines, poultry and juices and a lot of different household products. And as Hamza will tell you, their products are just iconic in the region.
I mean, it really is not just recognized, but a staple. And as you said, it's an iconic brand. And now even in the UAE, in Kuwait, it's really starting to stretch its limbs across the region. And we're going to cover all of that.
Before we get to the current position, should we go way back to the beginning, the origin story?
Before we start with the history of the company, by the way, Almarai was founded in 1977, and back then it was called Mastock Ventures, which we are going to talk about now, or Mastock International, Mastock Saudi. It went through a number of different names, but it started as Mastock. But before we get to Mastock, because that's an interesting story in and of itself, we have to start with oil, the liquid gold, the commodity that's driven so much of this region's growth, and particularly Saudi Arabia. And so we have to talk about oil, and we have to understand the market dynamics that led to Saudi's growth as a nation and why Almarai fits perfectly in that vision for long-term growth way back in the 70s, before Vision 2030. And so the first thing we need to know is that the oil market traditionally, leading up to the 70s, was a highly regulated market. So in 1970 and the years leading up, the average price was never more than $3 to $4 per barrel. And essentially what we have is a political landscape that's changing as well in the 70s. So you have a war between Israel and Egypt, and you basically have America, who is providing funds to the Israeli military. And then you have a collection of Arab countries who are not happy with this, primarily oil producers, right? So Saudi Arabia, I think they struck oil in like 1938, right? Prior to 1940. So we're past the days of oil discovery, right? We're now in a place where Saudi knows what it has in terms of resources, and it's trying to establish greater dominance on the world stage. And it's also trying to become a self-sufficient economy, right? And at this point, the economy is definitely not diversified in Saudi Arabia. It's pretty much 100% linked to the price of oil and the volume in which they can produce and sell. And this is also around the time where OPEC is starting to gain prominence. And the way they really gain their prominence is in 1973, they decide that they wanted to make a political statement showing that they did not support America's military backing of Israel in their war. And so they decided to launch an embargo. And I mean, this is an interesting move because it not only makes a political point, but it also really benefits all the oil producing countries that are participating in OPEC, because all of a sudden they are announcing that they're going to cut oil production. I think it was 5% throughout the year of 1973, which obviously has huge consequences.
5%, like each month, or like
each
they
month,
would reduce the production from, yeah.
Yeah, we can imagine if something like that happened today, like it would just be catastrophic. And in the 70s, you know, nothing like this had ever happened before. And the economy was growing, especially in the West. And so the reliance on oil, you know, back then we didn't have solar and wind and all these sort of trends into clean energy. So the world was definitely growing at a dizzying pace, and it was very, very reliant on oil. And so much of that oil was coming from the OPEC nations, and particularly Saudi Arabia, as they were expanding and discovering more oil fields. But obviously, at that point, Saudi, before they made this move with OPEC, since they cannot control price, they're super reliant on just discovery of new oil and how much volume they can sell and produce. And so if they want their GDP to grow, they better, you know, buckle up and produce more oil at the price that the market dictates, which was at that point mostly driven by America. And so Saudi decides we're fed up with that. and I think it was interesting that they framed it in conjunction with this political aim as well. Anyway, long story short, in 1974, the price of oil skyrockets about 200%. And no surprises, the GDP of Saudi Arabia also skyrockets about 200%, because again, this is not a diversified economy. So all of a sudden, Saudi Arabia as a country, if we move past the political aims of this move, purely economically, they get a windfall of cash coming in as a nation. And so much of their industry is still undeveloped. And the important part to start talking about Almarai, the important thing to note is that they don't have any food security yet. And so before Vision 2030 or anything like that, with all this new cash and this huge increase in GDP, they basically decide we need to do so much to develop our economy. We need to use these resources correctly, which is the right thing to do. And one of those things was to establish food security. And they're not the only ones to have this idea, but one of the co-founders of what is today known as Almarai was a member of the Saudi royal family, Prince Sultan bin Muhammad bin Saud Al Kabir. And so this guy is a key figure. But again, this is not Almarai yet. This is just a member of the royal family. He understands how the economic situation has changed. He understands what resources the country now has to grow. And he decides that we need to take control of our food. So this prince ends up linking up with the founders, two Irish brothers of a company called Mastock. And now Mastock is basically what it seems like, and it's difficult to find too much information on the early foundings of this company, but it seems like at that time, they're operating like a agribusiness advisory firm. And, you know, Ireland's sort of got this reputation for having, you know, green pastures and, you know, great quality butter and cheese and dairy and, you know, high quality dairy cows. And I think it was in London where this Prince Sultan met these two brothers, the main one being Alistair McGuckian. I hope I'm pronouncing his name correctly. So he's kind of the intelligence behind Mastock at the time. And this was their father's business, and their father was operating out of Ireland. And I think what Alistair and his brother brought to the table was that they decided they wanted to expand and take this system that they were implementing. You know, they had systematized a way of generating dairy yields from cows in Ireland. And they thought, you know, this is something that we can sell, right? Like consulting services. And there's not too much information about this except for what Alistair himself chooses to say about it, but, or at least not that I could find, but he basically talks about before they even tried to enter the Saudi market, they were attempting to bring their advisory services to Eastern Europe. And, you know, obviously Eastern Europe and Saudi Arabia in the 1970s are very different places. You have one which was under Soviet rule, not with the same interest in growing the economy and not with the same centralization of resources. And then you have Saudi Arabia, who's kind of operating like a venture capital fund at this time. And they have pretty much unlimited capital. And so they are willing to absorb unlimited R&D costs to meet their goals, which is obviously an amazing proposition for Alistair and his brother.
I would outline also that Eastern Europe at the time, I mean, had gone through a big industrialization push post the Second World War. So by the time of the 70s, there was less of a need for, no, there was a lot of need for development, but less of a need, particularly in dairy production. And there was an existing tradition and industry, and there was also a lot of wariness of Western companies. So I think the openness to the West was way less in Eastern Europe than that would have been the case in Saudi Arabia, which had really wanted to diversify its economy and achieve the food self-sufficiency that the government set as a goal. Whereas food self-sufficiency was never an issue in Eastern Europe. Actually, because most of these countries were exporters of food products, as it is the case today, right? Like we've seen over the last couple of years, been a lot in the news.
That's a great point, actually. So you're right. It probably would have been a really hard sell for Alistair and his brother entering that market. But it was an easy sell in Saudi, and we don't know too much about how they met or how they were introduced, but we can just firmly say that Alistair and his brother's meeting with Prince Sultan was serendipitous. and it was an easy
worked
sell.
out well. Yeah.
It was definitely the perfect product market fit. And it was perfect for Alistair and his brother too, because like we mentioned, there's unlimited R&D spend that the Saudi government is willing to provide to make mistakes, figure out a system, but just end up ultimately with something that works and something that meets their goals at whatever cost. And they have all this oil revenue to fund it. So, you know, this Prince Sultan, he recognizes the potential, right, of creating high quality, scalable dairy farming in particular, right? And at the time in Saudi, pretty much all of the dairy in the country was either coming from primarily local smallholding, mostly camel farms actually, or if it was not camel milk, then it was usually in the form of powdered milk, you know. And you know, we might think like powdered milk, that sounds a bit grim, like war rations or something today, but at the time this was just something that people lived with, and you know, it was kind of a common sense thing. Like, our country is in the middle of the desert, right? So what other solutions do we have? And basically, Alistair and his brother come to Saudi with their company Masstock to establish Masstock International with the support of Prince Sultan. And they basically start to go out and do some surveying in the desert, right? They want to understand, like, how can we turn this soil into fertile enough, productive soil? Because you can't just worry about the cows. You need to worry about what you're going to feed the cows. So they also were worried about, you know, the soil quality, which is in the desert, it's hard to grow crops to feed your cows. And then the other issue you have is, well, cows are not a native species to Saudi. And so while camels can handle the heat, there's, you know, heat stress that you have to worry about, and that's going to affect your yields for the dairy cows. And so this is a huge challenge for the McGuckian brothers. But again, unlimited money, so they can try loads of things and learn from their mistakes. And basically, you know, to cut the long story short, they go through years of experimentation, and they spent a lot of money trying to find a system, which eventually, the first form that this took was they would work with local smallholding landowners, right? These were usually small farmers spread out throughout the desert, usually close to oasis areas. But still, even in oasis areas, water is still going to be cyclical and variable, and rainfall is going to be very sparse. So their challenge is to work with the system that their father has developed in this new terrain, but at least now they have the land where they are, obviously it's an easy sell when they're speaking to these small holding local farmers that, we're going to do all the hard work. We just need access to your land, and you're going to get a cut of what we can do. And they end up importing cows from, I think they were like off-cycle dairy cows from, where were they, Australia?
Forgot. Was it Australia or Argentina or?
I feel like it was either New Zealand or Australia, but they basically scooped these cows up at a bargain, apparently, And it was something like 300 cows.
Yes, they do start with 300 cows. That's the origin story. That's the first
Yes.
thing. 300 cows in the desert. And obviously
Yes.
they need to figure out a way to feed them and keep them cool and make them productive and make sure that
So that's the next challenge. And so the next challenge, they end up coming to very rudimentary solutions. But I mean, these solutions work and they do increase yields and they're slowly iterating. Like we can easily look at this in hindsight and say, well, duh, that makes sense. But you know, in the moment, they're doing something completely new. And so many people think it's crazy as well. And they are spending all this money and trying to develop a system that works. And they still haven't tested the market with their products yet. So we're going to get to that too. And at the time, they come up with these rudimentary solutions. And one of those is just to basically cover the cows, right? So that they're in a shaded area. Obviously, these are not cows that are grazing in open green pastures. These are cows that are in a barn. And they need to cover them, obviously, to shield them from the sun. But the temperatures are scorching in the summer. So what they do is they install misters just to keep their body temperatures at a stable level. And eventually they invest more and more into ventilation. And eventually, you know, that leads to what we have today, which is the very advanced version of their first climate controlled sort of barns for cows. But the challenge is also what mix of fertilizer do we use in the middle of the desert to produce things like wheat and alfalfa, which eventually they'll use these crops to feed the cows, right? Because if they want to create food security in the nation, it's not enough to just have cows, but then to be importing all their feed. You also need to, if you want to control your costs and have food security, you need to produce the feed for the cows too.
Yeah, and I would say that this is the first version of the food security policy, really focused on the primary basic materials like the wheat and alfalfa. The government did move away from that because it was super energy intensive, and the fear was we sell oil to the West, the West sells wheat to us. So what if they cut it off the same way we cut off oil to them? At least a simplified version of what the policy was is what I read. And then because of that fear, they started like planting locally, but it was super energy intensive. So they did move away from that. So I think today they source most of they ended up sourcing from like Argentina, the US, Europe. So very global. But the early focus of the government policy was really on these crops. And at the point where Almarai came in and developed as a company, they went higher up the value chain where they could capture more of the value, create more value for the local economy.
100%. And you're totally right. And actually, it's worth noting also, and we're going to get to this in more detail, but those farms in Argentina and the US, they've actually acquired that farmland. So they're still maintaining that control and shielding themselves from that potential outcome that you mentioned, which is that they could have their feed cut off by the West.
Exactly. I think this is a standard policy, I may say, for countries which are concerned about the issues with food security, to go into different places and like buy access basically to the raw material, directly to the raw materials, so that you're not just at the mercy of the market. And even if you're not paranoid that the world is going to cut food, they're going to stop food export to you, it shields you from the swings in the commodity prices on the global market, so that your local consumer market can benefit from stable prices.
That's the idea, exactly. And obviously that comes with its own risks and complications, but I think we're gonna get to that later. But just to kind of wrap up this very interesting history, they finally have sorted out a system, right? And we're simplifying this a lot, but at a high level, they figure out a system. They've got the cows, they've got climate control that's now being developed, and they've got stuff to feed the cows. So now they need to test the market. And, you know, in the beginning, they start producing dairy milk, right? Fresh milk. And Irish people, culturally, it's a normal part of daily life. You drink milk. Whereas in Saudi, you know, this is a new consumer behavior that you're trying to introduce. And people aren't used to drinking cow's milk, let alone fresh milk. You might think like, well, fresh milk versus powder milk. Clearly, I'll take the fresh milk. But at the time, it's a switching cost. You're asking people to change their behavior, right? And people don't like change unless it makes sense. And so I think it's, we both came across this, and I think it's a really interesting move, and it speaks to, this idea of finding product market fit, especially in the beginning stages of an enterprise, where, they realize this is probably useless of us trying to spend so much energy. We've already spent all this energy trying to set up our operations and validate that we can do this. And it's a waste of time and energy and money to try and change these consumers' behaviors. So what we should do instead is let's use our product to create the highest level of quality of a product that the local market knows and loves. And that is Laban. Laban is a fermented yogurt drink. It's delicious. I think in Turkey you guys call it ayran.
Yeah, yeah, Iran is uh, the
Yeah.
Turkish version of it.
And boy, does the local market receive this well, you know. And at the time I was reading that most of the Laban produced locally was from camel milk. And a lot of this would have been coming from smallholder farms. It would have been super decentralized. So to put it in context, what Almarai is doing at this time in the early 80s is quite amazing. And they're really doing something completely novel. And, you know, Lebanon from cow's milk and fresh milk at that. And it's produced in centralized facilities, which we have to say they moved away from the smallholding farm model to centralize their operations as they're scaling. And all of this is totally new.
Yeah, they managed to obviously hugely increase production, achieve standards of quality that were unmet before. And even though the market was accustomed to camel milk-based lemon, they were able to successfully pull off that switch in the market. And they were by far the biggest producer. And also the one thing to note when we're saying that the company managed to pull off dairy milk farming in the desert, it's not just that they managed to create some version of farming that like kind of fits the conditions of Saudi Arabia. And I don't know at what point within their history they got to the current yields, but the company is actually a global leader. Like their yields are up there, like near those of Sweden and Norway. Like
Wow.
there's a benchmark. Yeah, there's a benchmark. I think only Israel has higher yields per cow. So the region is like somewhere like 10% or 15 of what Almarai is achieving. It's quite incredible. Like it's imagine it takes 10 Egyptian cows to produce what the Saudi cow is producing. It's quite incredible.
All in the middle of the desert.
Yeah. So what they've achieved is like, yeah, as Hamza was saying earlier, it may look like duh in retrospect, but all the tinkering and experimentation that they've done, obviously it came with a lot of capital as well, but they've achieved something truly remarkable.
Absolutely. And really the last part of their history, we can split into two parts on a high level. One is moving from just tinkering with operational efficiency to now branding and marketing and establishing a brand presence. But at this stage, we're still not Almarai, we're still Mastock. And I actually just came across this recently, but apparently they had some huge issues with the law in the early stages of their founding.
Oh, very interesting. I wasn't aware of this. What is it?
Well, I was quite surprised too, and I was trying to find more information about this, but maybe understandably so, it's a bit vague when you look into it. My reading between the lines is that Saudi not only wanted to create food security, but this was probably the beginning of a much greater push to nationalize so much of Saudi's economy, or not to nationalize it, but to localize it. Right? They were privatizing for sure, but they were definitely focused on localizing. And this was the very early stages of it. When, if for anyone who knows the story of Aramco, you know, it's a similar story, right? They were not the ones who found oil themselves. You know, these were kind of like swashbuckling, gunslinging, you know, Western companies essentially, and like very entrepreneurial Western guys who had a hunch that there might be oil out there. And, you know, obviously the Saudis played a huge role in this, but it was in partnership with these foreigners essentially, you know, at a very high level. And Aramco went through the story, just condensing this, you know, I'm sure a lot of our listeners know this story, especially from the region, but they basically had a huge push to localize ownership, right? To push out the foreign dependence as much as they could. And, you know, and now Aramco is what it is today. It's a stalwart and it's a Saudi company through and through. I mean, they hire foreigners, but it's a Saudi company. It didn't start that way. And so Mastock is kind of in a similar situation where, yes, they have this Prince Sultan behind them, but this is an Irish venture that's expanding into Saudi Arabia, essentially. But it seems like the Saudi government's not happy about this. And it seems like they start asking for compensation for allowing these guys to be so successful on Saudi soil. And some of the management was imprisoned. So this is like kind of the crazy part of the story. And I wish I
Oh,
could
really?
find more.
Well,
They were imprisoned, but then because of the prince's ties to the government, they were released later, but then the government was demanding money. And, the prince, even though he's part of the royal family, nobody wanted to lend him this money. I think it was like 17 million riyals. And nobody wanted to lend him the money despite his good reputation as a business person, as a member of the royal family, because this was such a tricky situation. I mean, they were in hot water for sure, from what it seems like. So he ends up going to Citibank, and Citibank gives him the loan. And so they end up getting past these challenges. But what ends up happening is they buy out the Irish Brothers shares in I think it was the 80s. And they go public in 2000, and what was it, 2004?
I think. Yeah.
2005.
Early, yeah, mid 2000s.
So even before they go public, they decided, let's localize this. Let's make this Saudi. Let's kick them out, and let's rebrand as well. Originally they rebranded to Mastock Saudi, and then they rebranded to Almarai. And Almarai, for anyone who doesn't speak Arabic, it's just the Arabic word for pastures. So they're trying to elicit this image of green pastures in the desert, right? And so even the positioning in the names, at the time is novel. And the last part of their history is how they take control of their branding and their distribution. And so they were working with a lot of retail partners, but they really focused on creating a sparkling image for their products. And so a few things they used to do. Number one is they would, for example, these products were being sold in maqalas, which are like local neighborhood corner shops.
Yeah.
Yeah, exactly. And this is a huge part of Saudi culture and social fabric. And these are small family-owned businesses. And one thing they did to ensure the quality of how their product was presented on the shelves was they actually supplied their own refrigerators. So even this idea of refrigerated dairy products in a corner shop was a new thing completely for the Saudi market at the time. And another thing they do in the supermarkets, well, first of all, even the choice to go to supermarkets and hypermarkets was a novel thing. A lot of people were used to going down to the souk, the local market, to pick up a lot of household items. And they wanted to distance themselves from that image, and they wanted to almost sterilize their image and sort of create this likening to the Western retail experience. And they were super successful at doing this. And obviously they have to market their brand as a premium brand to do this, because you have to price in the high cost of everything that they've done to achieve this. But I think it's really smart, and the last thing I'll say about this, and this is it kicks off the beginning of their branding identity, which is, their marketing division decides, let's have our brand be associated with those super high-end, premium, sought-after Western brands. And they do things like they introduce, they have to import these goods, obviously, but they import things like biscuits and jams from the UK, which was also a completely new product for the Saudi market. And so seeing the Almarai locally produced products sitting on a shelf next to these imported goods did a number for their image in the long run. And the legacy of that, we can still see that today.
Yeah, and there's an interesting thing where you mentioned, Hamza, where they provide their own fridges to the local shops as part of the product experience. And also mostly really it started as a necessity because the cold chain didn't exist. So they started by offering them right to everyone. And the fridges were exclusively stocked with Almarai, or are exclusively stocked with Almarai products. So then if their competitors want to come in, they need to come with their own fridge and everything. So I really wonder how they enforce that. But anyways, that's at least the policy. And apparently, from what I understand, it's quite successful in that having Almarai products in your shop is actually a competitive advantage. And if you do something against your policy, or you don't pay your debts, whatever, and then you don't get restocked, people won't come to your shop anymore. They'll go to the shop around the corner because they will have the Almarai products. And it's quite interesting how much power they actually have. Apparently something like 20% of the typical Bakalas shops are represented by Almarai products. So I think like 20% of the entire volume just coming from one single vendor, which is obviously not the case when you go into a supermarket, which can stock from like many different suppliers. And of course, they're still the biggest theory of the Almarai, and then they group the products also. They don't group them by brand, but they group them by category, right? You go into a supermarket, you have the milk section. So all of a sudden you have this problem as well. You can't put the premium British brand of jam or whatever it is next to the Marai Laban or next to their butter or something. And there is a bit of a power dynamic that's at play here with this changing in the supply chain.
Absolutely. And so that kind of touches upon how Almarai established a strong brand presence in the markets, right? And I think it's also worth noting that all of this seems like we mentioned, like a no-brainer in retrospect, but this was very much counterposition in the context of the Saudi market and the greater GCC markets. And like we mentioned in the beginning, Almarai was not the only company to be a part of this push for food security. You know, you have competitors now, quite a lot of competitors. But back then, there was a core group of competitors that were also established within 5 years of Almarai, and a few of them went public around the same time. I think they were just late to the punch, and they never were able to establish the same strong brand image right from the get-go. And it just feels like when you look at them today, even, and speaking to, you know, local consumers in Saudi, it always just feels like, yeah, they're a good brand, but they're not Almarai. And that's a moat that Almarai has built for themselves and around their brand. You know, Warren Buffett and Charlie Munger love to talk about, you know, this idea of a moat that you can build around your castle of a brand. And it takes time and it takes so much investment. And you know, they took those risks early on, and they are definitely not a monopoly, but they are just the strongest player in the market, and that's worth noting.
There was an interesting quote from the former CEO of Almarai, who's a Swiss guy that
Yes.
they hired to move over there. And he says something about along the lines of, in Switzerland, you just buy milk. You go to the shop. In Saudi Arabia, that's not the case. You go and you buy Almarai or you buy Danone or whatever, but you don't just buy milk. It's the brand attachment is much, much stronger. And it's probably because there's not many people who have the competencies to build high quality milk in the desert. And there's not many people you can trust with your nutrition.
Absolutely. And that also feeds into their ability to achieve economies of scale, because the fact that they made that huge investment and they took those risks and they had to flush a lot of cash down the toilet in order to land where they landed, you know, that, like you mentioned, I mean, the barriers to entry are actually really high in Saudi Arabia, because, you know, now a few decades down the line, they've not only centralized and solidified their operational facilities, but I mean, they have scaled them. I mean, you mentioned at the beginning of this episode that what is it, the largest vertically integrated dairy facility in the world, or just in the Middle East?
Yeah, I'm not sure if we touched on that. So it definitely is the largest dairy company in the Middle East. And I've read that it is the largest vertically integrated dairy company in the world. Yeah. I believe that's true, and probably because in most parts of the world, you don't need to vertically integrate all the way from the wheat production to the supplying the fridge to the shop. Like if you're going to start a milk brand in the US, maybe you'll just like the brand and then you'll outsource everything else, including production. Exactly. You can't do that in Saudi Arabia. And obviously you couldn't do that in the 70s for sure. So exactly. They built the capability of end to end. So even like if their supplier, if a competitor wants to come in, I guess that's where you're going with it, Hansa. You can't just like replicate part of it. You can't just say, oh, I'm going to the manufacturer. You need to like go all, maybe you don't need to like buy the alfalfa plants in Argentina. Maybe you can buy that on the open market. But most of what's taking a lot of capital and know-how to build is quite intricate and quite a lot of local knowledge that's needed as well.
Absolutely.
So it can't be like, some ex-European company can just decide I'm going to expand into Saudi Arabia. I'm going to use my current know-how to do that. It's not going to work.
Absolutely. And since we're touching upon competitors, I think it's worth noting that we do plan on actually analyzing this company and its financial health and its future prospects. But before we get to that, just since we've touched upon it now, we're talking about the competitive landscape, you know, and especially for listeners who are not familiar with the local market here, you know, like we mentioned, buying dairy, you know, as a consumer experience in Switzerland or even America is a totally different experience to the Gulf the Middle East in general. So the competitors have to position themselves and to invest accordingly. And so it's worth asking, how has the company's growth compared to, number one, the overall market, and number two is its competitors?
Yeah, that's right. I mean, I think there was another Warren Buffett quote or something where he said that you don't really know anything about a company until you know what you know something about their competitors as well, and at least how they're performing compared to them.
I think it's worth mentioning the first thing that jumps out to me, if we zoom in a little bit more, the main competitor, right, Almarai today is Nadek. And Almarai has something like 40% roughly of the total market share. And Nadek has something like, what is it, 10, 20%, I think. But, they still remain the smaller player. So, why is that? And I think that's really interesting because if you look at their bottom line net profit margins for Nadek, at least historically, they actually were not turning a profit until 2022. I mean, they barely made a small profit on the bottom line in 2020, but that was drastically reversed in 2021. And I think we see this across the industry, where we'll talk about Almarai, and they had some difficulties in 2021 as well. But what's worth noting is that Nadek, I think they were at least aware of this, that they were not operating efficiently. And I was reading that in 2021, they hired some consultants for a large restructuring initiative. They knew that their spending was out of control. And Almarai is like the final boss in this picture. Like, everybody understands that in Saudi. Like, if you're in the dairy or food and beverage industry in Saudi, you're up against Almarai. And so, this push by Nadek to increase efficiency in its cost structure is reflective of that. And to be fair, you do see that paying off, right? Like 2022, 2023, okay, albeit only 2 years, but immediately there's a change in their margins. But nonetheless, you look at the standard deviation of their returns versus Almarai's returns, their earnings, I mean, both gross margins and net margins, and it's significantly more volatile. And so it's a credit to Almarai for being so disciplined. I mean, they have been through hard times, and we're going to talk about their liquidity position, their balance sheet health, but they are stable. I think we can agree.
Yeah, they've had very consistent growth over a long period of time, and it's not skyrocketing growth. I mean, when you look at it over time, the compounding has done some magical effects. But I think it is I mean, the first thing that strikes you when you look at their financials, it's a very healthy, solid, well-run company and efficient. Definitely much stronger than its competitors.
Yeah. And its gross margins are pretty consistent. I mean, they saw a dip between 2019 to 2021, but it's stabilized since then, which you read the notes from the CFO and the CEO during these years, and they open up about the struggles that they're having. But I think given those struggles, just the fact that they're able to stabilize it and reduce volatility in returns, as an investor, that's attractive. And like you said, the compounding does magic here, but it's not a Tesla stock or Nvidia, right? This is good old-fashioned Almarai. And I think the appeal for a company like Almarai is a stable dividend, right? And they pay out something like 40% on average since they went public in 2005. So those things also they have going for them.
And their stock has been very stable, actually. Maybe that's, I don't know, that's a part of it is because most of it is owned by large local groups or the government. So there's maybe not a lot of rotation, not a lot of float. But you can see that their stock hasn't really kept up with the performance of the company, I would say.
Yeah.
This is a quick rundown. They did in 2022 the almost 19 billion reals, which is about $5 billion in sales, which translates to the exchange rate is 375 to 1, translates into 5.6 billion in gross profit. So about 25% gross margins. Obviously, we're not talking about software business here, right? We don't have like 60, 70% gross margins. These are businesses with like high energy requirements, high input costs, very capital intensive. So this is typical. In terms of then about half of that goes again out in terms of the operational expenses. so sales and distribution, G&A, and so on. So they're left with about 2.5 billion operating profits and about 2 billion in profits after tax. So I'd say basically resulting in a bit more than 10% net margins for the business.
Yes. And it's worth noting also, if we're looking at 2022, this was a turnaround year for them. 2021, they had a slight slump, although they were still, it wasn't anything to be completely worried about, but it definitely was a noticeable slump. And, in 2022, again, credit to management, they're able to turn around, their revenue, 18.7 billion that you mentioned. That's it. That represents an 18% year-over-year growth in just revenue. And their gross margins represent, as you mentioned, about 25 to 30%. And their net margin growth that year shows a 1.25% growth,
Yep.
whereas actually their net margins the year before had actually slumped in double figures. So that they show an ability to bounce back, which I think is also worth noting in addition to what you said.
One interesting thing to note is, so talking about year-on-year comparison, their revenues, the top line went up quite a lot, right? They were about 16 billion in 21, and they go up to 19 billion in 22. Their gross profits only grow from 5 billion to 5.6 billion. So obviously the whole growth doesn't translate through directly. That I highly suspect what's happening. Obviously, the cost of sales are going up. So I think what's happening is obviously 2022 was a year of a lot of, inflation all over the world in a lot of different segments. And I can definitely tell you that my milk at the local supermarket has gotten a lot more expensive. And this is basically Almarai passing on cost increases. And I've seen even from some of the research that there's been some tensions with the government about, because they have the power, they clearly have the market power to push through cost increases. Sometimes it can be a sensitive topic. So governments obviously don't want companies to take full advantage of that power. But this is a testament to their brand and their market position.
For sure. And actually, it's worth noting, when we read the notes from the CFO and these annual reports, especially in 2021, and 2022, yes, the big story here, in 2020, they managed through COVID marvelously. They're still showing growth. So it's not really the pandemic itself, but it's more some of the residual effects of the pandemic that really kind of, bite at their heels. And, one of the things actually is the reliance on a lot of these consumer staple brands in the religious pilgrimage to Saudi Arabia. So, this is a fairly reliable number of people that come to the country every single year. And it's not just Hajj, Hajj happens once a year. And that's sort of a massive influx of not just religious pilgrims, but purchasing power all of a sudden is boosted overnight.
Mm-hmm.
But you also have this constant drip feeding of pilgrims coming in for the Umrah, and the Umrah can be performed at any time during the year. And Saudi does have this right in their backyard, and so it's something that definitely these big brands, these big staple consumer brands rely on. And if there's an impact to that, you can immediately feel it through the market. So in 2021, people were allowed to go on these pilgrimages, but at the time, they were very strict about, like the rest of the world, very strict about vaccinations and double vaccination at that. And a lot of these people who come for these pilgrimages, not all of them probably had the means maybe to get the vaccine, or maybe just had a lot of skepticism in general towards the vaccine. And so you can imagine that there was a drop off in worshippers coming to the country from abroad, and that would have affected their numbers on the top line as well. But you mentioned the rising costs. Inflation is really the big global story here, right? Whereas the pilgrimages only affect Saudi. We also have to think about energy costs. You and I were speaking about this last time. Like, we often think of, any company that is based in Saudi, well, oil is so cheap that it's practically free. And like, yes, but it's also relative for each company. And if prices go up, they're still purchasing energy at the end of the day. And like you mentioned, these are very energy intensive operations. So that really ripples through to the gross margin and ultimately the bottom line.
Yeah, for sure there may be 100% sure of the environment. There may be some subsidies for energy, and I'm sure there are subsidies for energy everywhere there are, especially in Saudi. But ultimately, yeah, there is a market, right? And if they can If Aramco can make more money selling it to India or to, I don't know, China, then there's no reason to fully subsidize Almarai. Obviously not Aramco directly, but the Saudi government.
Absolutely.
I mean, they do it to a certain extent to protect the local population from food price inflation, like I mean, every government tries to do. But
Absolutely.
there is a limit to everything. And even if you look at their free cash flow, so their free cash flow did actually decrease despite the increase in the top line between 21 and 22. And there seems to build up an inventory. And I really suspect that's because of the higher value of the inputs rather than, I don't know, they have the wheat piling up in their in their warehouses. The volumes don't seem to be changing that materially, but probably just the value of the cost of these inputs has grown up. So you can see that in the gross margins, you can see that in the inventories of the business.
Yes. And so this is kind of the downside. Earlier we talked about the vertical integration and how it does offer them certain protections, but the downside is that, all of this is so energy intensive. And so you can only escape from so much exposure to your raw input prices. At the end of the day, there's an energy bill and you need to keep that into account. And this is reflected in their liquidity ratios in 2021. You see those drop off quite noticeably. You also see that in their working capital ratios. It just seems like generally they had to take out more cash than they were happy with, because there's a noticeable change in the trend in terms of their current ratio, their inventory turnover. We were also talking about earlier before we started recording. It seems like there was some issues with their biological assets in 2021. I was looking at some of the notes to their financial statements in that annual report. And so, a lot of these things are not talked about explicitly. And, obviously we're always going to get the top level management speak when we look into these issues. But it's worth noting that 2021 was a significant year that really rocked the company. But, again, I think it's important to note that this is still a dominant player in the market. And what's reflective of that is that they bounced back really, really swiftly. And between 2022 and 2023, I mean, not only do they stabilize, but they also show that resilience and that growth, especially compared to their competitors.
Let's say on the management commentary side, as you touched upon it in the CFO notes, the one thing that is a bit less straightforward, I would say that clearly there's a decrease in free cash flow. There's a CFO statement. It goes into a lot of details about a lot of things. But when it comes to the decrease in free cash flow, it's just like no outright explanation for it. Just like an acknowledgement. It's like the most obvious question. Why aren't you addressing it? But so you need to go to the footnotes and see that it's really the inventory.
Absolutely.
Build-up. That's I think that they could be more transparent with this sort of communication. But
absolutely. And we've spoken about this as kind of one of the issues as well. And it's one of the reasons that we want to kind of look at these companies ourselves, right, for this podcast, is because it's very difficult to find high quality analysis in these markets sometimes. A lot of it will be very the words will be very carefully chosen, let's say, and the analysis will be, curated. And so I think it's always worth digging into the notes for these things.
Yeah, and I think everywhere, I mean, maybe it changes more by region, but everywhere there's always a conflict of interest, right? Between if you think of equity research and investment banking in a typical investment bank, obviously everybody says that the equity research team is completely segregated and all, but sometimes a nice report can lead to a nice banking mandate or something. So it's people can something is unintentional even. Right? They can just have a
sure, absolutely.
They're biased by their interest.
Absolutely. And
so we have no interest in whatsoever.
We didn't make the disclaimer. I mean, obviously this is not investment advice. This is just us kind of interested in what drives local companies and the dominant players in this market in particular.
Yeah, I think an interesting thing to touch upon, Hamza, would be the shareholder structure. What do you think? We haven't discussed that at all.
Oh, I'm glad you asked that question.
Yeah.
and we spoke about this yesterday. So obviously, like so many of these companies, publicly traded companies in the Middle East, one of the issues that anybody who's investing in the region has to consider is liquidity risk, right? Or illiquidity risk. So much of these publicly traded companies are extremely illiquid, especially if you're comparing them to NVIDIA, Apple, General Motors. It's just a completely different market altogether. We saw this in the news just recently that actually one of the, if not the largest majority shareholder of Almarai is Savola Group. And Savola Group is another publicly traded company. They are a holding company. They also have some of their own brands, including a large grocery chain called Panda Market. They also have some of their own products that they sell. And then a lot of their portfolio is just investments in Saudi food and beverage companies. And Almarai historically has been their largest and we can probably say most successful investment to date. They just announced, what was it, like a week or 2 weeks ago, that they are liquidating 100% of their shares in Almarai, which we can probably expect to have an impact on the price if anyone's concerned about that.
But also when we say liquidating, that's not necessarily, they're not sure what they're exactly going to do with it. One option would be selling it, but the original idea, which has been going on for a couple of months, was they would distribute the shares to their own shareholders, actually. So obviously,
that's true.
Yeah, there's clear volatility and there's impact. Obviously, there's a 35% of your share base is going to get sold. That's a very different sort of pressure than if it gets distributed to a bunch of maybe retail investors, and then some of them will sell their stakes or whatever they would do. We don't know. But yeah, there's clearly been a move on the part of Savola to do something, and I'm not sure what's motivating it, but
it's not clear. And this goes back to our point about transparency in these markets. You know, you have to read between the lines a lot of the time. I think some things that I've gathered, and you can agree or disagree, is probably there's been an influence from the top down. Maybe internally they want to realize their gains, right? This has been a very successful investment for the company. They might have some concerns that we don't know about for the future, but they definitely sanitized and curated what they said publicly. And, you know, we can only guess, but we can see it having maybe a negative impact in the short term. I think in the long term, it's probably good for the overall market structure and for the shareholder concentration of Almarai in particular, because what you're doing is you're increasing the free float of the company in the long term, right?
Yeah, today, basically, I mean, you have Savola, then you have the vehicle of the Sultan Al Kabir, right? I forgot what it's called. And PIF is invested, no, so not the PIF directly, but the Saudi government is invested through a vehicle called Salik. So these three groups, Savola, the Al Kabir, Sultan, and Salik, are 75% of the shares.
Of Almarai.
Of Almarai, yes. I mean, obviously quite high concentration.
Yeah.
Very interesting to see if PIF would make a move. Obviously, they've done a lot of things, right? And there's been a lot of activity from their side over the last couple of years, both locally and internationally.
Yes, absolutely. And I'd like to ask you if we can dig down a little deeper, because we spoke about the margins earlier of the company. And I think it's worth noting that Almarai is a complex business. It's a business that has been expanding and trying to diversify, right? And the dairy business has its own sort of cyclical nature. It has its own risks. And so I think it's pretty common sense what Almarai has done over the past few decades to diversify the portfolio, right? To increase the amount of products. You know, they do put a lot of emphasis, we've seen both of us, on product innovation. I think that's one of the things that also sets them apart. They have the capital, the means, the scale, and the willpower, right? And the management know-how to diversify their investments and innovate. And so I think it's worth asking, Emil, what were some of the inflection points as well that brought us to this multi-pronged business that they are today? Because they started as just a dairy manufacturer producing lebanon. And it's been quite a journey since then.
Yeah, the way I see it is, I mean, the first big one is obviously the Saudi government drive for food self-sustenance. But then more commercially speaking, obviously first breaking into the local dairy market in Saudi Arabia, establishing that foothold. And then I think there's two big points. One is moving into the poultry and the juice markets, so establishing a really strong presence in those. And the second one is moving into the region, right? So Egypt, Jordan, UAE, or Bahrain. But especially, I mean, Egypt obviously is another scale, right? I mean, it's material, but it's nowhere nearly the level of dominance they have in Saudi Arabia. And actually, they still rely on small scale farmers supplying and everything. But definitely something to watch. But I think these are the key inflection points for the company. So going from basically nothing to dairy farm in Saudi Arabia to a food and beverage company in Saudi Arabia to a regional food and beverage company.
Yes. And it's interesting you mentioned Egypt. I think it's worth noting For also listeners who are not familiar with the local market, I mean, the scale of the country, like you mentioned, is immense, right? It's something like what, 100 million people? And I mean, it's definitely been touted as one of the key areas of potential growth in the region. And the Gulf countries in particular, across multiple sectors, have been investing heavily in Egypt. And, this also ties to one of the big losses that's contributed to their margins is the value of the Egyptian pound has just tanked over the past few years. And, there's so much that can be said about the macro environment in Egypt and why it's ultimately reaching a crisis point. And there's so many question marks about Egypt. And, we were reading about how in Egypt, the milk market, the consumers are used to loose milk. It's the idea that milk is sold in plastic bags, which is, I don't think any of us is used to this kind of consumer behavior. And so, they have to kind of enter a market like that. And against the backdrop of the macro environment, find a way to establish brand dominance and distribute. But it's also worth noting that in the context of the currency devaluation in Egypt, which is one of their babies, this is one of their huge geographical expansions in the past few years, they only have so much pricing power compared to the Gulf. If input costs increase in the Gulf, they do admit that they have to pass on those costs. And they have that pricing power, which is the beautiful thing about the brand they've established. They are that premium brand, and the consumer behavior is sticky.
And the market can take it.
And the market can take it. Yeah, yeah. Whereas in Egypt, I was reading that like in 1 year, when the sharpest drop in valuation of the Egyptian pound was something like 100%, and they weren't able to increase prices in Egypt by more than 15%.
Yeah, I think definitely, with the population so large, there is a sizable segment that can afford and will always afford and will be insensitive to maybe the increase in the price of milk, right? So what I was saying earlier, like I've seen the price of milk grow in the UK, and it was, I remember very well, a couple of years ago, it was 80 pence, and now it's £1.30 for a standard bottle, right? It's like more than 50% increase.
Yes.
I mean, it's a lot, but you don't really hear people complain about the price of the milk, because they complain about the price of rent. They complain about it just because like the tickets is much different. So in the same way, I think that there is within 100 million people, for sure have a lot of people who will be able to take that. And the way that I think the country is changing, and even with the short term or with the current challenges, I cannot see how the market will not be more formalized. And it takes times and there's ups and downs, but I think you got to separate a bit the short-term pain. Also, like what they sell is like basic food, right? It's like milk, yogurt, and juice. It's not like some very, I don't know, expensive like capital equipment or something where your money, I don't know. I think that the level of like if you fundamentally just believe that, I don't know, people have like, the cold chain will be more developed 10 years from now than today, and then people will want more high quality milk and high quality yogurt and all over the country, maybe, or in a lot of different towns all over the country rather than just the more developed areas, then I think that it will work out well for them. Of course, there's always an opportunity cost of capital, right? So I don't know what else they could have done or would have done with the money, and they will never have the Saudi government can or did provide whatever support they did in the beginning, right? And the connections of the founders were very valuable in being able to get the farming done in the desert. They don't have that luxury in Egypt or in any of the other markets. So I think it's a much more commercial enterprise.
Yes, absolutely. And I think you make good points. At the end of the day, the scale of the opportunity, again, not taking into account the opportunity cost of capital, but they definitely, given what they've achieved, I think we can say that if someone's going to figure it out in the region, it's probably going to be Almarai.
Yeah, there's not many people who could. So, and there's definitely, I think, just as incomes go up, like people just consume more, like basically food products that go through formal chains rather than informal, like a local market type.
Yes.
Yeah, I think that's just inevitable.
Yes, we saw Saudi go through that, going from informal markets, and it took a strong brand like Almarai to really cement that new formal, sort of curated form of distribution to consumers. So I agree with you. And we talk about Egypt. Jordan is their other non-GCC geographic expansion, right? Like they expanded into Jordan. Obviously, the scale is totally different here. You know, Jordan's a tiny country compared to Egypt. I mean, but you know, Jordan has its own issues as well. You know, Jordan, unlike Saudi and the Gulf, is not as reliant on the baqala form of distribution for these products. And so, you know, they found themselves, Almarai, in a position where they had to compete on the shelves with a lot of other strong, smaller, but local brands that are well known, have strong brand presence in Jordan on the supermarket shelves. And that's just the reality of what they have to do in order to compete in Jordan. But I'm less concerned with that just because of how small Jordan is as a country. I think it's good that they're expanding, and they acquired one of the biggest players, you know, Tiba, as a Jordanian, you know, traditionally family owned dairy production company. So that's obviously going to help them, but it's limited in its upside compared to Egypt, like you said.
And the other thing that's quite interesting is when they expanded into Jordan and Egypt, they did it through a joint venture with Pepsi, actually, which
Yes.
originally they owned 48% of and 50 owned 52% of. Now they actually, Almarai increased his participation to 52, so they're the majority shareholder.
You're
But
right.
the interesting stuff even is they started that not even as a regional joint venture. They said it's like an international joint venture. So they even had, at least there was speculation that they would like go to Southeast Asia or to other different markets.
Yes.
I don't know, South Asia, maybe Pakistan, or it didn't happen, right? The joint venture stopped there. And I think they have struggled in Egypt, despite my bullish description earlier.
Yeah.
But what do you think about their prospect of going either outside the region or into into adjacent product areas? Because as you think about the future of the business and like what next, where from here, unless like you say, okay, we're just gonna stop at the current, which I don't think they would. What's your take on the situation?
Mm. You know, there's a few things that come to mind in terms of geographic expansion. I do agree. I think in the short term they're going to struggle in Egypt, and even if they figure out how to position their brand in a dominant way in Jordan, like we mentioned, there's going to be limits to that in terms of what it contributes to the group's bottom line. This is a drop in the water. I mean, they've already expanded into the Gulf. You know, the UAE, I think, in terms of the share of total group revenue is second, but still has a lot of room to grow. I think we're barely into double digits of like share of the group revenue. So I think in the short term, they definitely need to, especially with rising competition, you know, NADEC, the consolidations, you know, the mergers between some of these competitors, and these very intentional initiatives like from NADEC in 2021 to change cost structure, to try and create efficiencies. And, you know, you can tell like they're coming for the king, and this is, they're not shy about it. So I think they can't let down their guard in the Gulf. And I think that just because their story is amazing and we can talk about how impressive it is and really remarkable that their rise has been, they still have a lot of work to do. I think, you know, 40% market share in Saudi, and then in the rest of the Gulf, it's a bit more fragmented. I want to see them in the short term focusing on solidifying and growing their presence in the Gulf. And then beyond that, you know, I was reading about, like you mentioned, their expansion plans into Southeast Asia kind of went very quiet after a while. And you can tell that maybe they ran into something, we don't know for sure, but something unexpected, right? That they weren't happy about, whether it was regulatory, whether it was the cost or the opportunity cost. But, you know, I think in terms of their division growth, we had a look at their divisions, right? As you mentioned, there's dairy and juice, there's bakery, poultry much more recently. And then very, very recently, they've been expanding into infant nutrition. And I personally just want to see them nip that in the bud. And I don't think their infant nutrition has gone well for them. I mean, you look at, you know,
That's a
how,
joint
you know,
venture as well, right?
it was initially, you know, it's funny when you read the CEO's comments, he calls it a friendly divorce or something like that. It made
Oh.
me laugh. So, but after that, they established their own brand. What was it called? Oh, Nuralac. So they branched off from that joint venture and decided to use what they learned. And it's been a huge amount to bring in the machinery and the know-how. And, you know, this is the Almarai way, right? For everything. And I think it just seems like to me that they didn't do the market research. And what they came up against is that this infant nutrition market is way more fragmented than they would like. And there's already strong brand presence, especially with foreign brands. Like, I mean, Nestle has a really, really strong presence in the infant nutrition space in Saudi and in the region at large. So they're, you know, they're up against Nestle for these things. And I just don't think it was, for a company as well managed as Almarai, definitely they missed something. And I think they just need to nip it in the bud, because when you look at, it's definitely not profit generating. And when you also look at their efficiency in this segment of converting that segment's share of sales as a share of the total group and converting that share into net income, it looks pretty bleak. And you can just tell that they're spending crazy amounts of money. I just don't see much promise in it. And the distribution is different to what they're used to. They're used to the Baqala distribution network and the supermarket distribution network. Whereas in Saudi Arabia, infant nutrition is distributed in pharmacies, and they just don't have those networks. And so, a part of my answer is what I'd like to see them do in terms of growth geographically, in terms of securing supply chain and distributing the risk. And a part of that is also just, sometimes you're doing so great as a business, you just need to saw off the parts of the business that are just not serving the bigger picture and just focus on dominating where you've been dominating, because I still think they have a lot of room to grow there.
Yeah, fair enough. I think the market is still growing a lot. I mean, in Saudi, even just population growth, right? And the age profile of the population is a huge tailwind for them. So they're probably going to see like significant volume increase.
Absolutely.
Well, first, I definitely agree that what they really need to do is very well defend their current castle, the current, as you said, yeah, which is the dairy business in Saudi Arabia and the rest of the GCC countries. And then obviously bakery and poultry as well as maybe the secondary parts. And maybe there's more potential growth there. In terms of any additional, so obviously infant nutrition is a new business. It's really, really small, right? They just bundle it under other activities, and it's almost rounding it compared to their main business. But so I don't know if like they're going to put a lot of effort behind that or behind any other product, or they would decide to go internationally. If they do go internationally, definitely, I don't think that there's any desire on their part or any logic that they would go into a developed country. So I don't see that you'd buy Almarai in Tesco, but could you buy it in Karachi or in Jakarta? Yeah, possible. Of course, there's other companies. I mean, like then maybe, I don't know, you could have a Chinese company or Kraft or whatever, Nestle, who you might be up against, but everybody will have the same challenges. So I think there maybe the fact that Almarai doesn't have the experience of managing, I don't know, a network of expats and like all of these like global supply chains and everything, they won't be able to tap into their existing local knowledge. Their competitors would also need to like learn a lot of like how to, if not in the desert, they would need to like learn how to make milk in, I don't know, still definitely not temperate climates. And Almarai would have that advantage over others. And it has a pretty strong balance sheet, and the capital by itself is not a competitive advantage, but it at least like enables you to play the game. And there's not many people who could play the game.
Yes.
In terms of other products, I think it's very hard to pinpoint anything. Definitely what I think will happen is it's a very young population, right? I think the average age in Saudi Arabia is 27 or something like that, maybe even younger than that, if I'm not wrong. And the whole region, something similar. I think that the consumer taste over the next 10, 15 years will change tremendously. So I think they really need to stay on top of that. And obviously it's a threat and it's an opportunity as well. It's a bit cheesy, but it's true because they can come up with new things. And also when you come up with like different flavors, different things, that you can typically charge higher markups, higher like value-added products, right? So you have like the plain yogurt and you have the, I don't know, strawberry flavor. That's more expensive. And I don't know, people might like other things. I don't know. Obviously it's a wealthy, or at least there is a significant chunk of the population that's wealthy and travels all over the world. And I don't know, maybe they'll see something in Brazil that they like, and then Almarai can like offer them that in Saudi Arabia, or they will see it in Japan or whatever. And I think that consumer taste will change very quickly. It won't just be the traditional Laban and just the plain fresh milk that's going to be driving the growth.
Yes, I agree. I think capital in itself is not a competitive advantage, but I think what you're alluding to is that it gives them that adaptability to respond to changing consumer trends, which I think in and of itself is very difficult for anyone to compete with, at least in the region, which is a credit to them.
Yeah, for sure.
So Camille, what do you think before we wrap up? Should we each go through hopes and fears for the company?
Yeah, let's do it.
All right. Well, I'll start with fears and I'll end on a positive note. Things I'm concerned about for this company. definitely the impact on their liquidity ratios in 2021 is very noticeable. Their balance sheet was slightly rocked during that year. And I think they need to seriously consider, for all the talk they do about vertical integration and operational efficiency and dominance, I think they need to use 2021 as a real learning experience, and think about like what investment opportunities do they have in front of them, which not only helps them grow, but helps them manage their expenses and manage their margins over the long term. Obviously we've mentioned that the past 2 years since then, we've seen stability, but stability is not growth. And we're definitely below pre-2021 levels in terms of margins, in terms of operational efficiency and liquidity. So that's something that concerns me, but that's just me nitpicking. Another thing is I really want to see them just cut their losses early. I know that this is probably going to hurt and it's like ripping a band-aid. Infant nutrition, I just think they have two options for this. They either have to double down and just really, really focus a lot of capital and energy and talent into trying to make this work. And I think it defeats the purpose of what makes Almarai so special. Almarai, they scale, and they've been so historically thrifty in scaling into areas where they know they're going to have a competitive edge. And I think they just didn't do that calculation with infant nutrition, and for all the talk they do about it. And there's so much, marketing. I see lots of promotional stuff about, these new facilities and how they're state of the art and how they completely control all the inputs. And that's great, but it needs to generate a reasonable return, right, for the investors, and it needs to be a good use of capital. So those are some of my fears. I would also say, looking at the competitive landscape, one can't dismiss the rise of Nadec. Despite the volatility in its bottom line, it's much smaller. In terms of market cap, we're looking at 10 billion versus almost 60 billion for Almarai. So there's a difference in scale here, right? But I mean, Nadec has much better asset turnover. So we're talking about Almarai misusing its assets, and its ability to generate turnover from those assets. And immediately just looking at the last year, Nadec already has a much healthier asset turnover, a much healthier liquidity position in terms of short-term liquidity, but their margins are sagging. But I think they're working on that, and I think they're putting a concerted effort. And it's not something that necessarily is a threat to Almarai's existence. It's just something that they need to respond to, and they need to be diligent. So I mean, it's not an existential threat. These are just concerns. In terms of hopes, things that we have to be happy about is if you actually break down the return on equity, this is one of the first things I did, is to understand, where the change in return on equity is coming from. And I think the biggest concern is, is that growth and returns coming from increased leverage, right? It's easy to engineer these things sometimes, but actually you see that it's to do with a strengthening asset turnover, right? And this is reflective of their economies of scale, right? That they're able to increase their asset efficiency as they grow and scale, and primarily their margins is the main contributor to investor returns. And the last thing is that for a company that still kind of maintains a bit of like family business dynamics, it was founded by a member of the royal family. His son, I think it is, still
the chairman. Yeah, no.
Yeah, and so, your fear sometimes with these kind of companies in illiquid markets, it's still kind of run by the family to some degree, is that they're going to mismanage it, right? Not to make any assumptions, but it is just sometimes a risk that these companies are, even though they're publicly traded, are managed like family companies, right? And I think the thing that makes me hopeful is to see that their earnings are actually super high quality. We looked at them together and we noticed that, I mean, obviously you can never know these things 100% for sure, but sometimes there are markers that, maybe a company's management is managing its earnings and trying to manage its share price as opposed to creating value for consumers, number one, and also for shareholders in a sustainable way. So I'm happy with their earnings quality. And I just think that, to wrap it all up, like, this is a great brand. They really have not just the brand strength, but the flexibility to enter new spaces and be a trusted player in that space, at least regionally.
Okay, should I take a stab at it as well?
Go for it.
So fierce competition, I would say, is a big one. They have been very successful being an early entrant and a successful entrant into a space where the skills are being more broadly dispersed throughout the economy. I think it would be way easier today for, even if not easy, but much easier today for someone to like set up a competing operation than it would have been in the 70s or 80s. One example is when the political tensions between Saudi and Qatar were happening a few years ago, they pretty much lost the Qatar market. And their former employees in Qatar set up a competing operation with like some local capital backing. And they pretty much replicated everything. And now is no longer in Qatar. It's a small market, so it doesn't really hurt them much. The trigger there was political, but it needn't be political. It just shows that like if you lose your game 1 second, like somebody else will come and
Yes.
compete against you. So definitely competition, I think, is one to watch out for. And second, I would say that this is double-edged sword, but what I was referring to earlier, which is the potential for consumer tastes to change. So that obviously they're the incumbent. When there's change as an incumbent, you're not necessarily in the best position because you're defending. But on the other hand, there's not that many companies in the region that are well run and institutionalized, so it can even help them expand their product line. And in both case, I think demography is working amazingly for them, right? Just the tailwinds in terms of the demographics and the economics, really, of the region. There's huge tailwinds. There's been a lot of talk about the diversification of the region, right? Of Saudi Arabia in particular, the economy. If you believe in that, this is probably the safest way to play that. Like, we're not talking about, I don't know, building a new golf tournament or building a new city or building, like, this is like a brand that's existed for more than 40 years. Like, it's something that people use every day. And as more and more people join the middle class and more people are born, then they're just going to consume more yogurt and milk and juice and chicken and bread. So I think it's a very safe way to play that, betting on the future of Almarai. And I think I would stop at that.
Super interesting. Love that.
Okay, listeners, here ends the first episode.
I'll just say to wrap up that there is so much to think about and consider. They have so much history. There's so much, I'm sure we've missed a lot of things that we could have touched upon. This is one of those companies that could have a part two if we really wanted to. But we can leave it there, I think. And, we'll talk about a different company next time. But I just think this is such a super interesting company, and I'm looking forward to the next one.
Right. Looking forward.